That's 58 points. You literally ignoring all this opportunity. So you're an apex funded trader, or you're on the way to becoming funded. You're still in the evaluation trade, and you want to know what are the absolute best trades that you can take every single day, because you honestly just don't have time to sit there during the entire market. Well, in this video, I'm going to show you all the 8 setups for this entire week: Monday, Tuesday, Wednesday, Thursday, Friday, some of the trades that I took, and help you pass your evaluation, or if you are a funded trader, help you just improve your training overall. If you're new here, my name is Forrest. I invest in stuff. I'm a day trader, and it is one of my passions to talk about finance and share what I know with all of you. We do have a Discord, so if you want to follow us live, see the trades that I call out and others in our community, the Discord is called Trade Edge. There's a link down below. And if you're new to Apex or have been using Apex and you want a discount, my code is down below as well. Of course, they will kick me back something, full transparency, but you help me, I'll help you type of deal. Let's go ahead and take a look at the charts, starting with Monday and going all the way to Friday. So get a pen out, guys, take some notes. There's gonna be a lot of content in this particular video. Let's go. We're gonna start with the 5-minute chart. If you know me, you know I trade on the 15-minute, but we're gonna stick to the 5 for now. I also just released a video talking about 4-hour chart, which you can see here, and all the merits of it. I think it's a great time frame overall, but we're gonna start here on what we see on the screen. So on the screen right now is a template that I call all time frames, and it just has literally every single time frame for ES. I don't know why it always changes the first one to SPX, but we have the weekly, the daily, 8-hour, 4-hour, 1-hour, 30-minute, 15-minute, and down here's the 5. I flex around with these times, these last ones. I'll go down to the 3 or in the 5. I want to investigate the 5-minute for now. So let's go to a chart that has the indicators that I want. Let's use this 15-minute, we'll expand it. And let's take a look going back to Monday. So we have the session volume profile, and we have VWAP. Really the only 2 indicators that I use outside of my support and resistance levels that I draw. You can see here that I have some alerts set that I'll leave because these are actual levels that I care about during the week, or really next week. So I'll leave those for now. But during the actual session, I'm only using these indicators. Why? So let's talk about what an A trade even is. What is an A trade? An A trade is something that, those are the trades that you have a very, very, very high amount of confidence, right? These are the trades that you just know are going to work. You take them, you feel good about them. The other trades, B trades, C trades, D trades, especially the C's and the D's, those are the trades where you either A, you get bored, or after you've taken an A trade, right, you're overconfident and you can almost feel that it's a bad idea, right? These are the trades that you're taking that you feel you're just wasting your time and you just feel like you need to play the market. What I really want to focus on in this video is just the A setups. And these indicators are really all you need to find these A setups, guys. In our Discord, we talk a lot about trading within the volume profile. We'll zoom in here. This volume profile for the session is at the end of the day. You can see the shape of it here. This is how it ended up, but this is changing and transforming throughout the day. So let's just look at, and this video might actually be really long if I do every day. So we'll go through a few days, kind of get the point across, and we'll try to keep this video under being forever minutes long. But we can see this develop throughout the day. So let's actually go back to the beginning of Monday, and let's change this to the 5-minute. Cool. So it is Monday at 9:10 a.m. We can see the session volume profile, and we're down here. Really, really solid trade that you could take is a reversion to the mean. The mean, and it can be a few different places, right? There's a few different averages that we might care about. One is the POC. POC is up here at 43.50 at this time. The other one is VWAP, the volume weighted literal average price. Now, there's a few different ways to calculate VWAP, so we're not gonna go super into it, like the range of this or how the rolling average works. It's an average of some prices, right? Some average of some prices that I've decided matter. And we can see that that average right now is 43.34 and the price is at 43.14. So if I take a trade, if I want to long into VWAP, that's a solid trade in the morning, trade that we talk about. Now you have to watch the book, you have to watch the volume profile, you have to understand that because there's a low volume node here, right? We're probably going to get a reaction here, we're going to get a reaction here, we're going to get a reaction here, we're going to get a reaction here. It's actually right at this level right now, and we could probably play this out and see what happens. So we'll go forward 5 minutes at a time. We see it's in this node, it top wicked right up inside that node, that low volume node, and look at that. So it came down, back up, volume profile changed, continues to morph, boom, look at that pop. Market opens, comes right up to, right underneath VWAP, but look where it actually reacted, guys. Right here under, there's this big shelf. It's essentially a low volume node, but there's kind of like a low volume plateau at this point. It's literally flat, reacted right off of it. That's an A trade. That is an A trade, guys. Understanding that the market's gonna want to come and clear this imbalance, and then it's gonna react off of these nodes. I mean, this is, if you weren't looking for a reaction or for the market to come to this price, that's really weird. And then the next target you have to ask yourself is like, okay, there's not a lot of participation here. They're probably gonna fly through here. If it it does. And the next area that I'd be concerned about is up here around 43.40. Let's see what happens. It rejects, POC shifts down, comes all the way down. It rejects off the bottom, this area here, perfectly. So you could have taken a long off of that. So it's been a great long on the way down, 43.12. Comes up, huge candle right here at 10 a.m. Back up to this little shelf here and let it play out. We're ranging, bottom side, finally comes up and we clear that level. So we went up, back down, back up, really choppy, but we finally came through when we filled in this low value area. And that was the A trade for the day. So let's go back and just to make this super clear for you guys, super duper clear. Go back to Monday, October 2nd, we're right here. The A trade was this reversion to the mean. So the VWAP was right here. That was the A trade. The next trade after catching that reversion to the mean was looking for the sweep back up to the upside. So if we replay it again, boom, boom, we went along into VWAP, boom, that's an A trade. It chops. So at this point, I'm like, okay, I could take a short off of here. I could take a short off my exit, which would have been fine, but I could wait for it to come back to the lows and then look for it to clear this liquidity again. I don't want a long here. I don't want a long at the highs. Take my exit, I short here. I don't want a long at the highs. If I'm looking for a long, I always want to look for a long at the outside of the range. So I want to look for a long at the low. Even though my target is up here and I think that we're going to push through this little value area, I want to long down here. Always want to long down. Don't want to long here. I want to long down here. Your odds are better. And if you miss it, you miss it, guys. Trust me, you can come, people argue about the shit all the time, but you want to long down here. So cool, we came down here. We could long right there, 43.09. Could have even longed, could have gotten in earlier, right, with a wider stop outside the price area, right where this volume cliff is. Could have taken a long. Anywhere here is reasonable to get to the other side, and then the price does what it did. We get up to this higher standard deviation band, 43.36 exit, and you would have got, say you would have got in right here at the bottom of the shelf, 22 points. A trade, that's an A trade. That's Monday. Let's move on to Tuesday. Otherwise, this video will literally never end. There's a lot more trades in that day, guys. I'm really just focusing on the high quality setups. Let's see what happened on Tuesday. Tuesday arrives, and I believe there was data on Tuesday. I can't even remember what it was, but there's this huge kind of sell-off motion in the morning. So let's just do the same thing. Let's replay back to 9 a.m. All right, 9 a.m. is here. We're at the lows. VWAP's here. POC is here. You have to ask yourself, all the participation overnight has been up here. Prior day POC is higher as well. So we've got 2 days, an entire day session, as well as the current overnight session. POC is up here. VWAP is up here. We're gonna wanna, unless you have a really strong reason to think that we're just gonna continue selling off into the open, we could take that reversion trade. Into VWAP is 22 points. Into the POC is 31 points. So let's see what happens. Let's say I go long right here. Let's just mark it on the charts. Let's say that I went long right here at 9 a.m. Let's see what happened. Boom, boom, bam. Chopped it up. Oh, cool. VWAP. Got pretty close. Obviously, it's not a perfect touch. I can see my screen as well as you guys. But from here to where it went, 17 points. Take 15 points. Oh, next 5 minutes, we actually punched through it. Cool. Let's take a break though. Some reasonable exits. A reasonable exit would have actually been here at the, oh, my mouse moved. Here at 43.09. From there to there to 43.09 is still 16 points. Why? Because there's a big ass volume shelf there. Next low value area, there's here, which you expect reactions up here. It's a little choppy to the upside. So that's a reasonable, that's still an A trade, right? That is an A trade. You literally ignoring all this opportunity. A lot of you guys are like, Forrest, how do you catch this and all that? Like, don't worry about that. The amount of money that you make in the market is purely based off of the risks that you put in. So in any trade, instead of asking yourself, well, how do I make sure I get, money out of this next big leg here? The question is, how are we leveraging into this trade, which is much more higher confidence than this big sell-off here? Because I can make $500 in this trade. I can make $10,000 in this trade. I can make $40,000 in this trade. I can make any amount of money into this trade. The question is, are you executing and are you leveraging appropriately for the high quality trade? What a lot of you will do is you'll be squeamish with this trade, and then you see this sell-off, and then you get in down here on the sell-off, or you get in down here on the sell-off, chasing, and there's just not much left, and you get smoked at the bottom. Obviously, it keeps going a little bit. Huge red day, it was a downtrend day, and that's fine. But instead of looking at the size of candles and saying, oh, I need to get that entire move, the size of a move is not related to the amount of money that you make. The amount of money that you make is directly related to the leverage that you do on average. Obviously, you throw like large risk into a model with changing win rate, that will affect your P&L, but we're not models, we're people. We are people. And so you 100% could make $100,000 right here, and you 100% can make $17 on this big move. And there's probably thousands of people who did both. It really is up to you as a trader, but we're focused on the A trades. This is a great sell-off. So let's say you get into the sell-off. You anticipate it's a trend down day. You should be leveraging in. So once we get past, we sweep this liquidity here, you could look to the left and say, okay, the next downside target is down there, which is Wednesday, September 27th, right lows. And so we could look for a sweep of that level, you know, another target, and you can just keep leveraging in. Trend days in general are hard to play, so we're not going to talk too much about that. Maybe I'll do a whole separate video on trend days, but we'll let that play out. Cool. Solid. Let's look for anything in terms of volume that's related. Let's actually just talk about Friday. Friday will be the last day that we talk about for this video. Friday was a day where there was 40x returns on options. If you can see the huge red glare on my screen, unfortunately. 40x return on options. If you would have bought like calls down here at the lows, you could have caught some pretty big moves to the upside. Here's the thing with option guys though. Like if you look at Thursday's session, tighter range, and then we had this explosion. A lot of people were playing options like crazy Thursday, and then were hands off on Friday. And by people, I mean me. It's not easy to just always catch these. I know hindsight, so easy with hindsight to say that you're gonna catch these moves, but it's never that easy, guys. It's really never that easy, right? So there's a few different strategies that we talked about, taking strangles, things like that. But let's just actually see where the volume is, right? So the market opens here at 9:45. There was this big sell-off overnight. So could have anticipated this big move overnight just because of how choppy we were, which is very abnormal overnight session for the current environment. Huge sell-off. A lot of people in our Discord caught this sell-off. That was I'd say that was a B trade on the sell-off. Little sweep liquidity there. And so we're down here and we get a strong bounce. So after this move here, when we get this bounce here, we should be thinking, okay, after a move like this, we should not have a higher than average bottom weight, higher than average volume on a bottom weight. So this is the first sign that this did not want to go lower. We get into the open at 9:30. And at this point in time, it's like, okay, with this much move, there should be aggressive selling. Let's actually just replay it on the 5 minutes. So there should be aggressive selling. You can actually see that reversion of VWAP. A trade, there should be aggressive selling, but there just isn't. There literally just isn't aggressive selling. So at this point, it's like, okay, we come down to the lower standard deviation band, high volume on the 5 minute coming in, green, 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 green. And so at this point, we were looking for essentially overnight highs, 43.05. We called out 43.05 right when we cracked like VWAP, you know, on this candle. I think we were calling 43.05, came up, eventually hits that. Now, did we expect it to go to the moon? Not really, but it did. And you could have made a 40x return on that if you were looking for that overall. This is a high VIX environment though. So I do think in general, we are going to be looking for more options plays. If you want to hear those call outs live, there's a ton of like discretionary real-time analysis that goes into like understanding this price action in real time, which doesn't show up when you're reviewing this. For example, let's go back to this arbitrary point in time. Look at the volume profile, right? So in hindsight, you get to see the final shape, but when you're actually trading the markets, all of this is transforming on a second by second basis, right? So it's a 5 minute chart, which is getting updated every second, every bar, right? This bar just went down and then back up, but that's happening in real time. So the price will go up and down and up and down and up and down and up and down. So that's where all the discretionary analysis comes into play. And that's why as a discretionary trader, we have to look at volume, price action, not just the outcome of price action, but the development of price action is really, really important in actually understanding and creating, or understanding the market and creating a thesis. So the A setup trade for here was just going long in general. We had an aggressive sell-off. Anytime you have a data candle, this is just another A trade that I always call out, talk about this a bit. You can fade most data candles, you can just fade them, which means just take the reversal. So whenever it hits its little low liquidity target, and you could tell it was puttering out here because there was low volume, right? We had low volume. There's a lot of volume selling. Sellers wanted to take this way. We should have saw continuation volume, and there just wasn't. Strong bottom wick, and so it's like, okay, you could have longed really anywhere in here. Anywhere in here would have been a reasonable long. It would have sucked being in drawdown down here, but it honestly was a reasonable long. Take a reasonable long, get out at VWAP, and you have, how big of a trade is that? 26 points. If you look for an entire reclaim of the bar, which is a good trade with data bars, it's solid, that's 58 points. And we eventually, as we know, got the full reversion. We got the full 58 points. So with one contract, trading Apex, you know, whoops, you're doing pretty good. You pass an account, make a ton of money, you're having an amazing day. Personally, I had an amazing week last week, trading the markets. Monday was cracked, did like 4 grand in one of my accounts, and then, you know, pretty average days the rest of the days. Whew. All right, let's review what we talked about. So A setups, what is an A setup? And when you're a funded trader, specifically with Apex or any funded trader company, guys, you want to only take A setups because that trailing drawdown will absolutely eviscerate you. You need to be a sniper in the market. You cannot dabble. You can't be someone who participates for fun, because their system is literally designed for people who trade like that to fail. They want you to fail if you're a dabbler. They want you to fail if you're a boredom trader. They want you to fail for X, Y, and Z. So be a smart trader, be a sniper, be patient, trading less. The only way you're going to increase your hit rate with trades is actually trading less, because when you trade less, you're probably being more discretionary. You're actually using discretion. Think about what being a discretionary trader is. You're using discretion in your trades, and you're just being more involved in what is happening in the market. You leverage into those, and you can pass just fine just by hitting, you know, 5 to 10 points points every day is more than enough for literally any account size. 5 to 10 points every day. You know, 1 contract, 2 contracts, all you need, and you'll pass just fine, whether it's an eval or a funded account. Again, my name is Forrest. Hope you appreciate that video. Leave your thoughts, questions down below. Definitely love the participation from you guys. I'm here to help. It's one of my passions. Join us in the community. There's a 3-day free trial. So click that link, join the Discord. We're in the voice chat on Trading Floor literally every single day that the market is open. A ton of us in there having fun. We'd love to have you join us. In any case, see you in the next one. Peace.